Hello everybody, I'm John. This is Strategic Investing, and today we are going to go over the public offering from Xtract 1. Now that we have all of the details, I just kind of want to go through what the dilution looks like, what the proceeds look like, and just kind of give my thoughts on what we're getting here. Before I do that though, just really quickly, I do want to address the interview with Peter that I took down. If you guys aren't in my Discord server and didn't kind of already get that explanation, there were some issues with releasing that during the offering, and I did have to take that video down. But at this point now, I think I can release that video. But I was talking with Peter, and actually, hopefully, we're going to get together sometime next week and do another interview. I thought that would be actually more beneficial because a lot of the stuff that we talked about in the previous one was kind of about what might happen in the offering. Now that we have all of those details, it's kind of not really relevant anymore, and it will be just helpful to now actually be able to ask Peter some specific questions now that we have all of the details from the offering. How that went, how successful they think the offering actually was, and just some details around that, and hopefully maybe even some details just around some general things with the future of the company. So hopefully we can get together sometime next week. We're kind of working that out, and get that up for you guys, and we can get some information and some extra context around this offering. So with that said, let's get into this offering here. I've put together a little spreadsheet here so we can kind of analyze this a little better. What we want to look at first here is the immediate dilution. So remember, the offering was made up of units that were comprised of one share and one warrant. And there were a few extra warrants that were issued to the agent. So what we're looking at total right now is shares issued 16.7 million or so, and about 17.7 warrants. And so from the shares, the immediate dilution we're going to see based on those numbers is around 7.8%. Okay. That is what we're going to get immediately right away from the shares. Okay. Now, if the total, if all of the warrants were to be exercised, if we're going to calculate this and include the warrants, we're going to get a total potential dilution here of around 12%. Now, some of you guys might be looking at that and going, okay, well, if the shares was 7.8, then, there's just as many, if not a little bit more warrants than the shares. We should be looking at around double what we see from the shares. So it should be more like 15 or 16% dilution with the warrants. That's not actually the case, because I think if we're going to do a true apples to apples comparison here, when we compare the shares and the warrants, the dilution from all of that, I think it's more relevant and a better comparison to calculate that based on the fully diluted numbers here. So remember, they also currently have other warrants and stock options outstanding. And if we're going to compare the shares and the warrants, we need to compare those to the shares and warrants that they currently have outstanding. So that number is a little bit larger, and that's why the dilution with the shares and the warrants isn't exactly double. Or based on how I'm calculating it, I think that's the more relevant way to do it, isn't exactly double what you would get from the shares. So again, based on a fully diluted basis is what we're talking about here. The total potential dilution would be just over 12%. Okay. So what do we get from that, right? What are we getting from that dilution? Well, the immediate net proceeds, if we get all of the money minus the commission of about $500,000 paid to the agents, that would be about 8 million, just over $8 million here that we're looking at, that we get right away. Okay. And if all of that, if all of those warrants are exercised, right, if we move, more towards the 12%, just from this specific offering, the warrants and the shares, we'd be looking at a total net proceeds of around $19 million. Okay, so immediately, right, what we already got basically right now, 8 million. If all the warrants are exercised, warrants and shares total together, we'd get about just over $19 million there. So if I go over here, what I kind of have worked out here is an example of how a portfolio might perform with dilution and without dilution, moving forward into the future based on certain market caps. And so right here on the top, we have, what the market cap potentially could be of Xtract One going forward. So I have a 500 million market cap right now. Again, there is sitting around about 100 million Canadian. I don't know exactly what it is with the stock price today. I didn't check, but right around 100 million Canadian. So we have 500 million, we have 700 million, a $1 billion valuation, $2 billion valuation, obviously potentially years till we get some of these valuations, but just to kind of show you guys, what the dilution actually means for your portfolio going forward. So I just put in kind of a base amount of 20,000. A lot of you guys may have less than that. A lot of you guys may have more than that, but just to kind of show you what we're looking at and illustrate with an actual dollar amount what we're looking at here. So based on having currently a $20,000 position in Xtract One, this is what your position would be at these market caps. So without the dilution, right? If you currently have $20,000 in Xtract One, obviously the share price has changed a little bit since I did this, but basically, this is some rough numbers here. You would have a right around $80,000 if the market cap went to 500 million, okay? Whereas with the dilution that we currently got, that would actually be about $9,000 less. You would only have 70,000, okay? Moving forward, if the market cap goes higher to 700 million, your position would be about 111 million versus 98 million with the dilution, and so on and so on. You can see at a $2 billion valuation, you're looking at about a $40,000 difference. So it's a significant difference as you move farther out in the valuation and the timeline of the company. So long term, this dilution could add up. And by the way, I'm calculating these numbers assuming the full dilution of the 12%, because obviously, if we were to get to these valuations, it would probably be years into the future, and the stock price will have risen, and so most of those warrants, if not all of them, would likely have been exercised. So I'm using that kind of 12% dilution number here to get these, okay? So just wanted to clarify that. But this is what we'd be looking at. But what this, some of you might be looking at this and going, man, this dilution is hurting my long-term gains significantly. And that's true, but what this chart doesn't take into account is a very important thing for investors, and that is time, okay? And so if this investment here, if this dilution that they're taking on in order to get these funds is truly to accelerate the growth of the company, right? Let's say we take on this extra cash and it allows us to get, like Peter was giving an example, a school or a school district with 50 or 100 schools or whatever, and we are able to put that money down up front, use the money that we got from this offering, and actually service that school and get those systems in there, and we get a large upfront contract. And that allows a ton of parents and students and teachers to see the systems, and maybe parents from other schools or teachers from other schools that come to meetings there and they see the system, and that maybe leads to another contract, and it just kind of balloons forward and has this snowballing effect where because we were able to get that contract, it helps us grow at a quicker rate than we would have if we didn't get these funds in the dilution, right? You can see where that potentially would happen. So what I want to show you then is what we could be looking at, over time. And so what this is roughly the same chart, right? So I have market cap, and I have the same thing with dilution, without dilution. The market caps are a little different here. And so I've put in some years here. So this would be 1 year out, 2 years out, 3 years out, and 4 years out. Now, don't read into this at all as far as whether or not these are my projections. These are not my projections for where I think Xtract One will be valued at these points in time. This is just to give you a reference of the market cap changing over time and how the dilution could accelerate it, and what that means for your investment actually. So right now I have the market cap's the same, right? But let's just say that because of the dilution, again, we were able to accelerate it slightly, right? And so, I just changed it here, right? So let's say without the dilution, right, we get 1 year from now, 300 million, right? 2 years from now, 500 million, 3 years from now, 750, and 4 years from now, we get to $1 billion valuation, right? Again, not saying that is my projections, just saying that let's assume that happens. But let's say that with the dilution that we take on, it allows us to accelerate that a little bit, not significantly by any means, but let's say instead of 1 year out, we're at 300 million, let's say we're at 350 million because we took on that dilution. It allowed us to, get some larger contracts, accelerate our growth, invest in innovation, invest in marketing, that then allowed us to, gain more contracts quicker than we may have without the dilution. So let's say that we get to 350 million in 1 year. Well, now in 1 year, even with the dilution, because we're growing just a little bit faster, you actually have a $1,200 better return with that $20,000 portfolio. If you look out 2 years into the future, say we were able to grow, that's about 20% faster, right? So 500 million versus 600 million. Now you've actually have $4,000 more than you would have before. And you can see, even if you change this down to say 580 million, would that be like that? You're still looking at more, right? So even if it's only like a, 16 or 18% difference, right? Even a small acceleration in growth is going to outpace any of this dilution that we're seeing here. That's kind of what I'm trying to illustrate here. And so this is kind of basically the argument for taking on this dilution, is that if the dilution allows us to, even in a small way, accelerate the growth of the business, even though at the same market cap years down the road, you would have a better position without the dilution than with the dilution, you're likely going to reach those market caps, those valuations, faster than you would have if you had not taken on the dilution. And because of that, when it comes to 1 year out, 2 year out, 3 year out, what type of returns you were getting, from a time perspective, you could very likely still get a much better return even with the dilution than you would have without it. So, that's kind of the main thing that I want to touch on here, and really the potential value in taking on this dilution. So we don't just want to focus on the pure, like, okay, we're getting 7.9% or 7.8% dilution, or we're going to get 12% dilution, and we're going to get 8,000. Okay, do I think that's worth it? What you really need to look at is, okay, we're taking on this dilution, we're getting this money. How much more do I think this money is going to help us grow? How much faster, specifically, do I think this money is going to help us grow? And that will tell you, then whether or not it's actually worth it, right? So hopefully that helps you guys kind of evaluate this and understand it. Obviously, again, you guys can do your own math with whatever your portfolio is made up of, and where you think Xtract One is going to be in the future. But hopefully that kind of gives you at least a baseline to be able to make some, calculations and assumptions. So if you have any questions, as always, leave those down in the comments below. Other than that, I'll see you guys next time. Have a great day.